Urgent, direct tone. You've likely noticed the sudden, sharp cost every time you fill up your tank. Over the last few months, the price for everyday energy and fuel has spiked at a rate that directly drains household budgets. At the same time, many investors are opening their apps only to watch their standard portfolio or crypto holdings take sudden, chaotic drops. This financial anxiety mirrors a physical reality. Entire neighborhoods have been reduced to dirt craters and burned out concrete as regional conflicts erupt across several continents. This aggression has moved onto the open water. Critical maritime routes are now contested zones, where national coast guards use high-pressure water cannons to physically intimidate smaller vessels and dictate who controls the flow of trade. These aren't isolated incidents. They are symptoms of a massive systemic transition. We are moving away from a world defined by open, frictionless trade toward one defined by guarded borders and national stockpiles. If you try to manage your personal savings without understanding this overarching global rewiring, you are operating completely blind to how wealth is actually moving today. For decades, the global economy ran on a single mandate: maximum efficiency. Supply chains were built to source materials from whichever nation could provide them for the lowest possible price. This drive for the lowest cost built a massive network of sprawling shipping ports and endless rows of cargo containers connecting every nation. Geopolitics has broken that global trust. Nations are actively abandoning cheap efficiency, choosing instead to prioritize national security and self-reliance. Building localized, redundant supply chains from scratch is significantly more expensive than importing from an optimized global market. These new priorities mean production costs stay high. The oceans have become a primary point of failure. 80% of global trade relies on massive fleets of cargo ships traversing sea routes that are no longer guaranteed to be safe or open. When a major artery like the Red Sea is disrupted, ships take 1,000-mile detours. They burn more fuel and take longer to arrive, and that cost is passed directly to the consumer for every good they carry. The physical world is becoming more expensive because a geopolitical premium for security is now baked into the price of nearly every shipped product. This battle for control extends beyond physical land and shipping lanes. The most high-stakes competition is now occurring over digital infrastructure. Superpowers are rushing to secure the specific technological choke points that dictate future power: massive data centers, advanced AI models, and complex semiconductors. Manufacturing these components requires extreme technical precision. As you see here, intricate robotic arms execute automated sequences on silicon wafers. Because this process is so difficult to replicate, nations are aggressively hoarding the capability to build them. By locking down intellectual property and heavily restricting exports, superpowers are intentionally fracturing what was once a collaborative global tech sector. Whichever nation successfully secures its own isolated supply chain for semiconductors and AI will hold the ultimate geopolitical leverage over the rest of the world. These conflicts, both physical and digital, ultimately translate into mathematical movements on the global trading floors. We have to ask, how does smart money, the massive pools of institutional capital, react when global tension rises under this new focus on security? It retreats. Institutional funds rapidly exit risky, growth-based investments and move into secure, tangible assets. Capital flows out of the stock market and into safe havens, like these stacks of gold and silver locked away in secure vaults. Watch how this reallocation looks. As institutional capital pulls out, the price plummets, breaking support levels in a liquidity sweep. Retail investors see a dip and buy, ignoring macro trends. Their buy signals are instantly bypassed by the downward force. The logistical safety net that kept prices low and trade predictable has vanished. In its place is a landscape of perpetual uncertainty. In this divided world, personal financial literacy requires geopolitical literacy. You cannot safely invest your capital without tracking these shifts in global power. Do you think this tension will eventually cool down? Or is this fractured, expensive economy the permanent reality we have to live with? Let me know your thoughts in the comments below, and if this breakdown helped you see the bigger picture, please share it.